This is the US 10-year bond yield. It has increased more than 100% since the start of 2021. Some fundamentally strong industrial, logistics, and data center REITs are included into the same scale. All of them have a negative correlation since 2021 when compared to the 10-year bond yield. What does that mean for REIT investors? Stay tuned. I will be talking about REITs to look out for during price correction due to the cost of borrowing expected to be increased. In particular, I will be zooming into the industrial, logistics, and data center REITs. It seems that recent price correction in REITs is due to the increase in the 10-year bond yield as there are concerns in interest rates hike and hence increasing the cost of borrowing for REITs. Let's see what we can learn from history. We will be looking at the previous three sharp increase in the 10-year bond yield. First, we will be checking out what happened from December 2008 to April 2010. Mapletree Industrial Trust is listed in late 2010. Frasers Logistics and Commercial Trust is listed in late 2016, and Keppel DC REIT is listed in late 2014. Hence, we won't be seeing them in this chart. During this period, all the industrial logistics REITs are in the positive. Next, we will be checking out what happened from July 2012 to January 2014. During this period, Mapletree Industrial Trust and Mapletree Logistics Trust are positive, even at the peak of the 10-year bond yield. Do note that Capitaland China Trust only have retail holdings back then, and hence, we can ignore the negative returns. Lastly, we will be checking out what happened from July 2016 to October 2018. Again, do note that Capitaland China Trust only have retail holdings back then, and we can ignore the negative returns. During this period, all the industrial, logistics, and data center REITs are positive, even at the peak of the 10-year bond yield. In the grand scheme of things, let's look at the comparison chart of the 10-year bond yield from the bottom in July 2012 till today. Do note that Capitaland China Trust only expanded their mandate to logistics and business parks and other new economy assets after 2019. Notice that all the industrial, logistics and data center REITs register big gains since 2012, even with the recent correction in the price of REITs. Let's summarize the learning points till now. The past three sharp increase in the 10-year bond yield lasted approximately 2 years. Both Mapletree Logistics and Industrial Trust ended in the positive, even at the peak of 10-year bond yield, for all the mentioned scenarios. Considering the fluctuations of the 10-year bond yield in the last 10 years, all the industrial, logistics, and data center REITs register big gains. We are trying to learn from history here, and hence, there's a need to note that we are using past performance as a guidance and that past performance is no guarantee of future results. With all this in mind, let's go back to the comparison chart from the start of 2021. All the industrial, logistics, and data center REITs are negative currently. I see opportunities to collect them in tranches. So the question now is, buy which REIT? Before I go further, let me reiterate the aim here is to buy fundamentally good REITs at a fantastic price so that we can get good capital gains and also good dividends gain while waiting. Let's look at the various REITs parameters, including the average cost of debt and debt maturity. I have considered debts maturing in the next 2 years, as we have seen earlier that in the three previous sharp increase for the 10-year bond yield, they lasted about 2 years. I have excluded Frasers Logistics and Commercial Trust and Ascendas India Trust from the table, as I have not looked deeper into them. Those parameters that have the best parameter out of the 5 REITs mentioned are in green fonts. In my opinion, all of them have good parameters and handle their debts well to a certain extent. Hence, even with the cost of borrowing expected to be increased, the impacts to the business are reduced. Personally, if I have limited cash to deploy or due to portfolio allocation of a stock is full, I will look to collect more shares in the following order. Mapletree Industrial Trust first, then Mapletree Logistics Trust, and lastly, Capitaland China Trust at the price range mentioned. Let's round up by checking out others' opinions. This is an article from The Edge Singapore. The article mentioned the following. It's time to accumulate on weakness. Most REITs are trading close to 52-week lows, highlighting attractive re-entry points. The weakness came largely from the expectations of rate hikes. They are looking for an opportunity to accumulate upon the weakness. To summarize, fundamentally strong REITs will continue to grow, even in high interest environment. Good REITs tend to manage their average cost of debt and debt maturity well. Hence, even with the cost of borrowing expected to be increased, the impacts to the business are reduced. The aim is to collect fundamentally strong REITs at a fantastic price so that we can get good capital and dividends gain while waiting. It's the same idea with short-term pain, long-term gain. This is a list of references I have used to create this video. Thanks to these links and your kind attention. Do subscribe and check out my other videos. Have a great day ahead.